Good morning. This is Ron Brown. It's Sunday morning, the 10th of July, 2022. I'm going to go ahead and record this, what I call prospecting with HGSI video rather than a weekend report. There are so many weekend reports out there, it doesn't make a lot of sense just to rehash what other people are saying and doing. And so I'm going to try this, show you some features that are unique to HGSI and how to get that information out of the program. So here's my disclaimer. Any stock index or ETF mentioned in this presentation is not a recommendation to buy or sell. All trading strategies are used at your own risk. If you don't use HGSI yet, you should. And you can get a free 30-day trial at highgrowthstock.com. And you don't have to give us any information about credit cards and so on. You just get a 30-day trial, and it will expire automatically at the end of 30 days. But it's certainly worth trying. You also get access to my Insider Club files. Now, this is the way I've got my layout set up this morning to talk about this. I'm in my Ron Brown top-down analysis charts, and I'm down in folder number 10. I'm using these black charts. This is the daily chart, number 2, and the weekly chart over here, number 3. And I made a column change in some of my views. I'm in my top-down process for market analysis right now, and I'm using view number 2 for major market ETFs. I'm going to concentrate on the ETFs for this portion of the video just because they give us a insight into what's happening in the full market rather than looking at the major indexes. The major indexes, of course, or some of them are represented here by the Qs, the NASDAQ 100, the Russell 2000, the IWO, and of course the SPY for the S&P 500. So if you're just using ETFs either for trading or for analysis, you get a good comparison here between the broad markets and also what the ETFs are doing. To make this a little more informative, I just paused the video and I decided to add the percentage change versus the S&P 500 for 5 days and 10 days. 1.00, as you can see on the SPY, that represents the baseline. This is a proxy for the S&P 500, and anything over 1 means it's outperforming. So 101 means the IZRL outperformed the S&P 500 over 5 days by 1%, but underperformed by 1% over 10 days. Now, if I go up here to the top and look at ARKG, these are the ARK funds that I put in here. 1 day performance was, 5 day performance was 15% outperformance and 8% over 10 days. On the percentage price change, down slightly on Friday, but for the week up 15.8%. So I'm going to use ARKK in this example since this is probably the most well-known of the ARK funds, and let's see how it did. First of all, let's start here. You can see volume on this for Friday was above average, the spread's below average, and it closed in the mid. So I'll just bring it up, and that information corresponds to what we have in the chart here. Above average, below average, and closed at the midpoint at resistance. You can see this resistance goes back here. These resistance lines are drawn in automatically in this chart. Now compare this resistance here to the weekly resistance, and you can see it's in the same spot or the same area. This point here is represented by this point right here. Now I want to take you through these other columns here. Here's the last close. The days since, if you hold your mouse up here, the days since the 3 crossed the 6 says 3. It's actually 4 days ago because 0 is the crossover day. And I'm just going to go to another chart quickly. I'll go to my number 1 chart here, make this full screen. I'll zoom in on this, and you can see the crossover day here on the histogram. The 6 also crossed the 18 on that day, but the 3 crossing the 6 with a VPA flag which says high volume up bar, closing on the high indicates strength. So that was an excellent signal so far. Now, just looking at the chart, it's really hard to tell how much progress was made since this. So this would have been on Tuesday. If you look down here in the corner, that was Tuesday, the day after coming back from the 4th of July weekend. A lot of buyers stepped in, and there was also a pocket pivot and a volume point of control on that day. Now, looking up here, you can see that the volume point of control, I just mentioned it, happened on the same day. So that was a buy point, and over a 5-day period, it's outperformed the S&P by 14%, and over 10 days by 4%. So outperformance yesterday, or I'm sorry, on Friday by 1/10, and a price change since the beginning of the week is up 15.5%. Now, I want to jump back here to my daily chart, and now click on the weekly chart. This number here, 15.5% since the beginning of the week. If I click on this bar right down here, that's what this represents. I'm going to zoom in on this to show you. I'll bring up a crosshair, put it right on this spot, and then I'll hit my alternate A key, and you can see these lines are selected. If I draw this up here, I'll get as close as I can. And if we look down here, you can see it says 15.6%. I didn't quite get it on 15.5, but you don't need to draw that. I'm just pointing out that when you're looking at this, and you look at this number, that means it's from the opening price of the week to the closing price. Now, if you look down here, you'll see a number that says 1368%. What that represents is the the closing price from last Friday to the closing price this Friday. So this number down here in the chart, last Friday's close to this Friday's close, but this column up here, 15.5, represents from the opening price this week to the closing price. And of course, this column represents the 1-day price right here. Why am I going to this trouble to explain this to you? Because I don't want any confusion about what this beginning of the week means. It means that these ARK funds had a very, very strong week this week. You can't really tell it just by looking at the chart, but if you look at the numbers here that are calculated automatically in HGSI, you can see where the strength and weakness was in these ETFs. I'm going to make this full screen. You can see that as the market went up, the UVXY, the volatility index, fell, and it fell by nearly 12% from the beginning of the week on Tuesday until Friday's close. We can get a lot of information just by looking at this warehouse view, and if you download the views today or my files today, this is what you're going to get. I just added these 2 columns today for clarity. So if you want to know where the strength is compared to the S&P 500 over the last 5 days, here you go. Nothing much changed here on this sort, but if you do this every day, you can quickly see where the shorter term strength is. I didn't think it was necessary to put the 1-day change in here, but that column could be added, and the reason I didn't is because we have a percentage price change 1 day. So ARKG, the genomic revolution, was down slightly on Friday, just a slight pullback, but here is where the strength is. Look where it is, down since the beginning of the year though. So these still have a long way to recover, but they're getting a good start. Now let's close this. Let's bring this chart up. And just looking at the bar, you can't tell a lot, but I can immediately look up here and see this is up 15.8% for the week. Now let's resort on this to the downside. Click over here. VIX is down. What else is down? The TLT was down 3.8% for the week. Gasoline was down 3.6%. Gold down 2.9%. GDX, and you can see over a 5-day period that these are all underperforming the S&P 500. You have to get down to this for equal performance. This is the total stock market ETF, Vanguard. It performed in line with the SPX. And once again, if we get down here to the ARK funds, that's where the money's flowing right now. Traders are thinking that we're going to get a strong tech rebound. At least that's the way I read it, because they're pouring money into these funds that have been beaten down so drastically. I'm going to take a quick look here, just go down to the sector indexes. These are, of course, the S&P sector indexes, and you can of course see which ones are underperforming and outperforming. What's outperforming over 5 days? Consumer discretionary, but over 10 days it's actually down. And let's see what the tech sector did. Over 5 days, outperformed by 1%, underperformed over 10 days. Let's go down to the sectors expanded. Actually, I'm going to... Okay, I need to move back over here to this side. And the biotechs, you can see how well the biotechs have been doing. They've outperformed over 10% over the S&P over 5 days and 8% over 10 days. Semiconductor spiders, or the SSD anyway, performed in line with the S&P, underperformed over 10 days. I'm going to sort on this 5-day. Home builders have outperformed over 5 and 10 days. Consumer discretionary has also outperformed. What's underperforming? Gold, their Euro Stock 50, metals and mining. So these columns come in handy. And remember, you can see how these have performed on the weekly chart since the beginning of the week just by clicking on here. Biotechs up 11.5%. Let's bring this up. Let's take a look at this. When did the biotech start moving? Long time ago.